spotlight now then on Bajaj Auto, and to discuss more on the outlook, we have been joined by Rakesh Sharma, ED of the company. Hi Rakesh, good to be speaking with you. Firstly Rakesh, let's start with your domestic sales outlook, because what we are seeing is that the Jan and February sales, though they were holding up, but on a YY basis, that was a bit of a decline that we have seen. Give us a sense that were the numbers below your expectations as well, and what factors are weighing heavy on demand, if any?
Good morning.
Good morning.
February has been a little bit of a speed breaker encounter because almost all segments of the two-wheeler industry, whether it is EV or it is ICE, motorcycles or scooters, they've all faced a decline at an industry level. But I would not read too much into just this 1 month. The nature of our growth in the last couple of years or 3 years, and particularly this year, has been that it sort of swings quite widely, if I may say so, from quarter to quarter. Like Q1 was for the motorcycle industry, I can tell you, was plus 11 or 12%. Q2 dipped down to 1 or 2% growth. And then Q3 again picked it up to 11 or 13%, and particularly because of October and partly November sales. December was very low. So you can see that, 11 to 12 percentage point difference between quarters. That's quite something. And that's also sort of explained to some extent by consumer behavior, because consumers are now timing their purchases, particularly for discretionary products like two-wheelers, into the best times of the year, which are around the season where they get into the mood. There are some of the better offers, etc. So February hitting -5 or -6% at a retail level for the industry cannot be extrapolated, and we are not extrapolating it. We feel that the fundamental drivers are still intact. And we should see, not double digit, but 6 to 8% growth in the industry over a period of time. Not month to month, but certainly quarter or 4 months, 5-month periods, we should see a 6 to 8% growth.
Rakesh, what I also wanted to ask was, because you had projected that 20% plus year-on-year export growth, which has materialized. Wondering what's driving the growth and how retail trends are now shaping up in Africa and Latin America. And can we expect this figure to go beyond 20 plus now in this new tariff regime in the world?
Yeah, actually, what is driving this growth is stability coming into the markets, particularly in Africa, which was in very deep decline. It is still in some decline, but it is bottomed out. The real hero of the performance it has been Latin America, which has now become the single largest region in the world for motorcycles. It's almost 2-3 times the size of Africa. That's grown like in 20% plus. And there, thanks to our position held for many, many years, we have grown faster than the market, and that is to some extent driven the growth. So I would say a combination of market position and the markets returning is what has driven our growth to the 20% you're talking about. Asia has also returned, but it is in low single digits still. South Asia is also coming back. Sri Lanka, the foreign exchange situation is good, and Bangladesh also normalcy returning. So I would say the outlook will continue to be the same. The only sort of dark cloud on the horizon is the uncertainty around currency, because both the geopolitics and the tariff wars tend to make the currency move in a skittish manner in the emerging markets. And that has an impact it devalues, and that devaluation has an inflationary impact in the markets. Though it is, I must say that gentle devaluation is very welcome for our US dollar earnings. But on the other side of the coin, it increases prices and dampens the demand. So one can weather this for a few months, but if this becomes the norm, that would not be very helpful for the market, the recovery of the markets, particularly in Africa, to continue.
Rakesh, you think this is going to be a repercussion of the tariffs on Mexico?
No, I'm saying that those tariffs are not just about Mexico. The tariffs are, there is an uncertainty in the global trade, and uncertainty always causes money to gravitate towards safe havens, and that makes one currency more strong than the other, and that leads to a devaluation impact in some of the weaker currencies, in which are usually in the emerging markets. So I'm saying, apart from the fundamental recovery which is taking place, which was well underway, this is one little uncertainty which is there, and we have to see how that plays out over the next few months.
Strategy to try and mitigate the risk of, currency devaluation?
Sorry, I didn't catch the question.
No, I'm saying, like, what's the sort of fallback that you have to try and mitigate the risk of currency devaluation? Any hedge?
For a company like ours, it's very difficult to fight macroeconomic trends, and one should sort of bend towards them and manage for them. And what we do is we reduce our exposure of our channel partners on stocks, etc. But there is for a company like ours, which has got almost 40% of its revenue coming from overseas, the inbuilt mitigation factor is widespread presence. We are now in 104 countries, and that is the hedge, because there are always some countries falling off, but on the other hand, there are certain countries which are certainly bouncing back. We had Philippines, we had, like I said a little while back, we had the countries of Latin America, particularly Mexico. It's become one of the largest markets outside India, China, and ASEAN, and we have people like countries like Sri Lanka also, which are experiencing a return to normalcy, better foreign exchange reserves, etc., coming back. So the best hedge for an international business on the industrial side, I am saying, is this meaningful presence in a wide array of countries, and that mitigates things for us.
Good morning, Mr. Sharma. This is Sherlo, also joining in the conversation. I just wanted to talk about what's happening back home. We have the OBD 2B norms, which is the emission norms. They'll be kicking in from April 1st onwards. I wanted to understand about your company, how well are you prepared for this? And also, if you could help us understand what could be the likely cost impact, and also, will this lead to any price hikes across segments? What should consumers prepare for?
Yeah, we are fully prepared for the OBD2B transition, which is actually underway, because we have to complete it by 1st of April. And progressively, each model which is now being produced is transitioning to the OBD2B system. When it comes to pricing, or how to manage the cost increase necessitated by OBD2B, we have to factor in not just the cost side, but the competitive side. So we are watching carefully how competition also responds to it. It's not a very large increase, so it's not as if one has to take it irrespective of what competition does. It's a small increase, but given the market situations, etc., astute pricing management is the need of the day.
Rakesh, another point that we wanted to understand is that the company has taken the top spot in the electric two-wheeler space, indeed. But how do you see the dynamic shaping up? Is this due to the competitor struggle, or do you see sustainable growth and leadership in this space going ahead for Bajaj Auto?
Yeah, see, we have always said we have to be on the podium finish. It is all about competitive ratio, whether you are number one or number two. Even if you are number one with just a small margin, it doesn't mean anything. It just gives you a little bit of a bragging right. But the real value comes when you have a solid competitive ratio with the number two. And that is what our ambition is. over a period of time. It ain't going to happen in, a few months. That is what our goal is, to be in the top spot with a reasonable competitive ratio. And we feel that we are on the right track. Even though it's only a sort of 100,000 units per month kind of a size of industry, you can sort of divide it into two parts, which is the sub 1 lakh and the above 1 lakh kind of segments, very simplistically. We have been doing rather well in the sub 1 lakh segment, where I would say we have been leaders for a few months now. Again, by a few percentage points. What has changed the dynamic in the last couple of months is our entry and success in the above 1 lakh segment, where we had a very weak presence. But because of the launch of our 3.5 series Chetak, which has been accepted extremely well, we are garnering market share quite handsomely in that segment. That's where I feel that the combination of holding our market share in the sub 1 lakh, which is at a leadership level, and then garnering new business in the plus 1 lakh segment, both in combination, gives us a lot of confidence for continuing to do well in electric two-wheelers.
All right, Rakesh, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us. But with this,
if you like this video, then like, share and subscribe to ET Now.